What's up everyone and happy new year. In this video, I'm going to be talking about 7 different stocks that I believe are very discounted heading into 2022. So I know a lot of people love to talk about stocks after they're already at like their all-time high or after they already break out. So this video is going to focus on stocks that are at low levels already and that are looking good. You know, we're not talking about stocks like AMD or Nvidia, which, you know, are great companies, but it's just like, who wants to be buying AMD at $160 or $155? Like, this video, we're focusing on stocks that are already low. So let's get right into it. The first one is Square. So I really like this company. It's at a pretty good level right now. It's right around $160 a share. If we zoom out, we can see over the past 2 years, it had highs of $289. And right now, it's at its lowest price that it's been since basically November of 2020. They're a financial services company. They also just changed their name to Block, and they're really focusing more on like blockchain technology and like it seems like cryptos and things like that. And Square is unique in the sense that it's definitely a growth company, but they're also pretty well established at this point. They own Cash App. They have like those like, you know, like when you go to like a coffee shop or something, like the Square payment processors and things like that. And they're like really, they're really starting to innovate with like blockchain. Jack Dorsey is also focusing on this company full time now. So I think it's pretty good. I like it. I like it for the long term. And it's at a good level. And like I said, like they're a growth company, but they're also pretty well established. Like it's not like in the beginning stages of its growth, but it's good. I really like it, and I especially like it at this price point. Like I said, they own Cash App as well. If we zoom out for like a, let's say 4-year chart, we can see over the past 4 years, it has been exploding. Since like 2018, it was trading at like $42 a share. They dipped down to like $32 in like the COVID crash of 2020. And then they've just been rocketing ever since. Like I said, they have all-time highs of $289 a share. Right now it's at $160, you could say, $161. So I really like this price point. This does not mean it's a low, but they're a solid company. They're willing to innovate, and it's kind of like a blockchain play a little bit. So feel free to keep it in mind. I really like it at this price point. The next one is Disney. We all know Disney, and at this level, it's hard to resist. You know, it's a solid company. It's kind of a value stock, but it also has that growth potential in it as well with their Disney Plus, and also they are really starting to, I don't want to say innovate, but they're I guess you could say adapting to current trends. They are looking to have a big sports betting deal with their ESPN platform, and they're looking to make that deal with either DraftKings or Caesars. So that should be huge, and that should definitely be really big for Disney. And either way, they're a solid company. And what's really nice about Disney is Nancy Pelosi and her husband just loaded up. So, and it's call options too. It's not like it was just shares. Like they bought call options, so they're pretty bullish on it. It's at a solid price too. You know, if we zoom out on Disney over the past 3 years, we can see the low was like $79 in the COVID crash of 2020. All-time highs are $203. Right now it's around $155, we can say, but it's starting to pop back up. Like I said, this does not mean it's the low, but it's a solid company. It's hard to go wrong with them. And if we zoom out, like to let's say the past 10 years, they are a pretty solid company, and they're doing pretty well. You know, they're on a pretty awesome uptrend. Over the past 5 years or so, they went from lows of around, you could say $80 all the way up to highs of $203. So I like them. Like I said, solid company. The next one is Zoom. So Zoom is at an awesome price in my opinion, and they have pretty good earnings. So I know a lot of people were kind of hating on Zoom in the sense that, oh, when the world reopens, no one's going to be using Zoom, but it's just not the case. Like they're actually reporting great revenue numbers, and their price just continues to fall. So it would be one thing if we were talking about Zoom when it was at like, you know, $450, but Zoom is at $184 right now. Like it's a pretty nice discount. And I understand that, you know, they are pulling back, and that makes sense. You know, like over the past couple of years, over the past year, it looks like. Oh, sorry, this is the 10 years. Let me go to 1 year. Actually, let's go to 3 years. If we look back over the past 3 years, it had lows of $59 and highs of $588. Right now, it's at $184. Plus, they're reporting some good earnings numbers, good revenue. They're beating analyst expectations. They're beating their own expectations. So I really like it. And plus, with I guess you could say the Omicron variant, if anything like that got out of hand or any other variant got out of hand, Zoom has done very well in situations like that. So I really like it, and they're a solid company, and they definitely have a lot of innovative potential, especially when it comes to the metaverse and things like that. And at this price point, it's hard to beat, in my opinion. The next one is Chewy. So Chewy. Chewy's looking pretty good. Also, over the past 3 years, it has had some awesome growth, and it's at a great level. Over the past 3 years, it had lows of $20.62, highs of $120, and then right now it's at $59. It's at a pretty good price point. They're growing at a pretty rapid pace, and it's not like we're talking about Chewy when it's at $100. It's at $59 right now. So I really like it. Again, this does not mean it's the low for Chewy. It is in a short-term downtrend, but personally, I'd rather be buying, a stock when it's lower rather than when it's trending up. So, and this is just for a longer-term play or a play for a couple months or even a couple years. So keep that in mind. The next one is DraftKings. What's a stocked up video without DraftKings? So DraftKings, one of my favorite companies over the past 3 years. Really, they SPAC'd in 2020, but their lows are around $17.60, highs around $74, and right now they're at $27. I never thought they would trade this low again, but it's a blessing and a curse. It's a curse because no one loves to see a stock that they're holding fall lower, but then again, this, I guess you can say, dip gives us a lot of opportunity to load up for the long term. They're growing at a crazy pace. They're in a really early growth phase. If we were to compare DraftKings to a company like Square or Zoom, Square and Zoom are a little bit further along in their growth phase. They are already more established and they're in better fundamental positions, while DraftKings is in that earlier stage. You know what I mean? So if we look at Square's chart, for kind of an example, we can see from 2019 to 2020, it was in this growth phase / back and forth consolidation phase, and then it really turned on the jets and popped up, and it ended up going significantly higher, we'll say that. And DraftKings is in that type of consolidation phase, in my opinion. There will be a lot of volatility over the next couple of months and even over the next couple of years as new states legalize sports betting and as DraftKings comes out with new products and new innovations, we can say. But I really like them for the long term, especially at this price point. They're growing at a crazy rate. Of course, there's a lot more states that will legalize sports betting, and then also they're in a very profitable business, but they do spend a lot of money on marketing right now, and that is a slight concern for some people, and I understand that. But I think they're a great company, and especially at this price point, it's hard to pass them, in my opinion. One thing to keep in mind is that in terms of sports betting and things like that. I know in the most recent quarter, DraftKings had a weaker hold than expected. Basically, that means they did not make as much money from their sports betting business as the market expected them to. And that was because it was something like 70% of NFL games, the favorite one, and then also 60% of the overs hit in the NFL game. So apparently a typical bet with sports bettors is you bet the favorite and then the over is a parlay. So a bunch of those were hitting, and that was obviously bad for a sports book like DraftKings. So I'm curious to see how this upcoming quarter, how their hold looks relative to last quarter, especially with all of the NFL games and college football and all that. So it should be interesting. Then with the next one, we have Corsair. Corsair is a solid company. They've been in business for a while. They have to do with computer hardware and things like that. I feel like the Christmas season should help them, but more importantly than anything else, just a lot of growth stocks have been getting destroyed lately. Corsair had so much hype, I guess you can say in the end of 2020. It went from $14 up to highs of 51. Right now it's at 21. So I think it's at a really good level. The downtrend is starting to like flatten out. We could see like over the past month or so, which is a good sign. There's a huge support at $20. This is definitely a longer term play for me, and I do like its growth potential, especially at this price point. Now with the next one, we have Palantir. So Palantir was one of the most hyped up plays of, I guess you could say, like late 2020 / early 2021. And it has really just done nothing this year. It's kind of just held its ground, which isn't bad, especially compared to other growth stocks. But we could see its all-time low is around $8.90, and its all-time high is $45. Right now it's at $18. So it's a solid company. They have to do with like AI and all that type of stuff. I really like their growth potential. They're a solid company, and at this price point, I really like them. So with everything being said, those are like probably like my top 7 favorite stocks for 2022. That does not mean that this is the all-time low or this is going to be the most recent low on these 7 stocks, but I really like them, and they're in really good setups in my opinion, especially like DraftKings, Square, even Disney and Zoom. Like, you know, Nancy Pelosi's loading up on Disney, so I guess you could say that's a good thing. Zoom's at a great price point, like I said, and Square. Looking at Square, like the more I read about this company, the more I like them. Honestly, I wouldn't be surprised if it ended up going just a little bit lower, maybe to like 150, maybe 145, because they are in that downtrend, but it's not as severe as like some of these other companies like DraftKings or like even Chewy or Zoom, in my opinion. Like we can see if we went to like Zoom, like it has been downtrending for basically the past year, for being honest, where Square, their downtrend has only been happening, I guess you can say, since like early to the middle of November. So I really do like Square. It's just I think they might fall just a little bit more. So with all of this being said, thank you guys so much for watching. Happy New Year. If you have any questions, let me know in the comments down below. But other than that, thanks for watching.